the volume profile into this price pushed away from the value area heights with big buys backed by smart money, big banks. That is what, as institutional traders, we are looking into when we see aggressive selling not rewarded. What that means is, when I enlarge, I'm going into the footprint chart, see this aggressive sellers, red delta, pushing the price with bearish stacked imbalances, trying to push the price down. However, ending up in a wick, which means aggressive sellers were not rewarded, and bullish candles starting to print. When you see these signs, this retracement is completed. These are confluences for us to enter into a buy trade. So this is a live market. When we see the cumulative volume delta printing bullish candles, and this bullish candle printed with big trades with bullish order flow, the delta is green, which means the order flow is also bullish now, supported with aggressive buyers. That is where we placed our buy entry 1 to 2.5, take profits. What you had a look was world-class level institutional trading concepts taken using order flow concepts, footprint charts, volume profile, the secret sniper big trades indicator used by world top traders. Welcome into another live stream. We will show you a trade which we published a little while ago. I am in the 30 minutes chart of micro Emini-NASDAQ index futures. In the last couple of days, the price is in a range. So if we draw the fixed range volume profile into this, you can see the price strongly pushed up away from the value area high. And when you look at the S&P 500 index futures chart, you can see the same range. However, if you compare with NASDAQ, the NASDAQ had a breakout, breaking up from this range, but S&P 500, that area is still within the range at New York time 9:30 a.m. So we can see two different stories in S&P 500 and in NASDAQ. And with that idea, we looked into the 5 minutes chart. This is the micro Emini-NASDAQ index futures 5 minutes chart. The price pushed away from that range in the 30 minutes. So if we draw the fixed range volume profile, this area, the price strongly pushed away from value area high. Comparing the NASDAQ 5 minutes chart and S&P 500 chart, NASDAQ shows somewhat clear chart because the range and the price breakout. But if you look at the S&P 500, it is a bit choppy. So if I draw the volume profile from here to here, so you can see at that time S&P 500 also around 9:30 pushed the price away from the value area high. However, it came back inside into the value area around 10:30. Then if you look at the same price action in the NASDAQ, at 9:30 it break out away from the value area, but at 10:30 it did not come into the value area. So the price came back, retraced into over here. Now when you look at that time, if you look at the price push up, you can see the delta is green and also cumulative volume delta is green, which means aggressive buying happens with high volume. So that breakout also supported with bullish stacked imbalance, this green bars over here. So if you look at only NASDAQ, you will see it as a bullish move for that time. But since NASDAQ correlates with S&P, if you look at S&P 500 chart at that same time, it's not showing a clear bullish sign, especially because you can see the retracement came all the way inside into the value area. Also you can see in the retracement, cumulative volume delta is bearish, which means aggressive sellers were pushing the price down. So because S&P 500 is behaving like this at that time, even though NASDAQ showed us bullish signs until at that time, we were cautious of taking a trade. Then if you look at that same time, 10:30, at NASDAQ chart, you can see bullish cumulative volume delta. However, retracement is very sharp. Strong candles coming down, which means bearish cumulative volume delta, meaning aggressive sellers. So even though it's a breakout here, and even though it's a clear breakout, and even though it's a clear retracement, due to these reasons, we were very cautious. Even though the price action is clear, the delta and the cumulative volume delta and S&P 500 is not supporting that bullish idea. And you can see in the retracement, it's strong with strong negative delta, meaning aggressive sellers. So with that idea, we look the 1 minute chart. So if you look over here at that time, this is where we placed a quick buy entry, but let me explain why we placed that buy entry. So if I draw the volume profile into this price area, so this is the NASDAQ. So you can see at 9:30, the price strongly pushed up. So this is where we were analyzing earlier. The price pushed away from the value area height with bullish stacked imbalances. When the price pushed up at that time, the price pushed strongly with big buys. So what this means is, when the price pushed up, this price push up is backed by some big players. So this could be smart money, institutional traders, big banks, for that instance, for that quick price push up. So that gives confidence to us that this could be supporting a potential bullish trade. However, we have to further analyze, but this shows us the signs, and also you can see the cumulative volume delta is bullish and strong volume. And when we look at 10:30 a.m. during this retracement, heavily pushing down the retracement towards the value area high. And when we see this red bubbles printed, what that means is aggressive sellers are now pushing the price down, which means for these buyers, when they push the price up in this area, the price has been considered expensive. That's why aggressive sellers strongly push the price down, supported with bearish stacked imbalances. So because of that, and also negative delta, and also cumulative volume delta bearish, and also strong volume, because of that, this retracement is very strong. So when a retracement is very strong, it could go further down. So that is what, as institutional traders, we are looking into. So we are sharing these insights with you all, so that you all to understand how institutional traders are looking into price. Basically, these concepts I am discussing with you all are institutional level price action trading using volume profile and order flow analysis. So what I'm talking right now about big trades and stacked imbalances, these red color bars are order flow concepts. If you would like to learn the trading strategies we use, click the link given in the description below to access the full free course and use that knowledge to get funded and start trading like a professional. So when we see a strong push down, then we are not going to enter into a trade. So because of aggressive sellers pushing the price down. Now, however, because the price pushed up away from the value area high of the range, and because of aggressive buyers pushing the price up, you can see what we noticed was, even though aggressive sellers were pushing the price down, you can see these aggressive buyers over here has defended the price. So the earlier smart money, institutional traders, big banks who enter into the trade defended the price because they don't want to go into a drawdown at this level. Now you can see because of that, even though aggressive sellers were pushing the price down, the price halted. Now why did the price halt? That is because there is a large pool of passive buyers sitting here. Also the previous buyers defending plus accumulation. Accumulation because when the price pushed up strongly over here, there is also still unfilled orders. So when the price retraces over here into this level, there is a wall of buy limit orders sitting here. And also for this price push up, if I draw the volume profile, you can see there is value area over here. And you can see in the retracement, the price came down all the way below the value area low. And this retracement came all the way into this low volume node. Now this is what smart money traders call as fair value gaps. In this price push up over here, there's a small fair value gap from this candle high to this candle low. So these smart money traders, which they consider as fair value gaps, if you look at institutional traders, they look that area as a low volume node. So as institutional traders, what we look at it as the price retracing into low volume nodes. The reason is these low volume nodes has unfilled trades, the trades which were not being able to fill because of the strong price push up. So because of that, these low volume nodes act as a magnet for the price to retrace all the way. And then we notice the wicks being generated, and also when we see aggressive selling not rewarded. What that means is, even though the price pushed down and red color bars are bearish stacked imbalances, when I enlarge, I'm going into the footprint chart. You can see this aggressive sellers, red delta, pushing the price with multiple bearish stacked imbalances, trying to strongly push the price down. However, ending up in a wick. There's a wick generated, which means aggressive sellers were not rewarded. Then they tried again. Again over here, aggressive sellers push the price down. Again, they are not rewarded because the price did not push down. Price made a wick, and you can see bullish candles starting to print. Now, when you see these signs, when they are not rewarded, what that means is, this is the idea for you that this retracement is completed. What that means is, now we are in a price retracement. So in this retracement, when you see aggressive sellers are failing at this point at a previous area of interest, which means the previous aggressive buyers were here. So if I go back again to the chart, you can see this big bubble, the green bubble over here. So this area of previous interest for buyers plus low volume node and retracement, price pushed up and retracing down. So the retracement being completed just in the low volume node, and aggressive sellers failing to push the price down, aggressive sellers not being rewarded. This is the footprint chart again, and wicks generated, and then bullish candles being printed. These are confluences for us to potentially enter into a buy trade. So this is the 1 minute chart of micro Emini-NASDAQ index futures. Once we see those signs, that's where we were interested of taking a quick buy entry. Now, why did I say a quick buy entry? The reason is, even though NASDAQ is showing us these bullish signs, as I explained earlier, S&P 500 chart was not showing the same bullish signs. S&P 500 chart was showing a choppy price action. Let's jump into the NASDAQ 5 minutes chart. So this is a live market. So you can see at that same time, NASDAQ is showing bullishness, meaning, however, with strong retracement. So because of all these reasons, strong retracement plus S&P 500 not supporting this idea, that is why in the 1 minute chart, even though it looks like a A+ setup only in NASDAQ, overall considering S&P 500 chart as well, it's not a A+ setup. However, we can see the signs of short-term bullishness in NASDAQ with these signs, and immediately when this bullish candle printed with this green bubble over here and this green bubble over here, that is where we immediately see a potential buy entry. So also you can see why we did not enter into a trade in this area, even though it's making wicks and printing bullish candles, is still the cumulative volume delta is bearish. However, when we see the cumulative volume delta printing bullish candles over here, and this bullish candle printed with big trades, and this area being now acting as support. Now when the price push up, why we enter into a trade over here is, all these aggressive sellers, when the price pushed up, there's a chance where their stop losses are triggered. They may come out of the trade because they see their efforts are not rewarded, aggressive selling. And also you can see large number of aggressive selling, bearish stacked imbalances not being rewarded. However, buyers are rewarded with a small effort. So sellers are not rewarded with a large effort, but buyers, these green bubbles, are rewarded with a small effort. If buyers are rewarded with a small effort, and if cumulative volume delta is bullish, and if it's a bullish candle supported with bullish order flow. So if I again go into the order flow footprint chart, you can see it's now green. The delta is green, which means the order flow is also green. What that means is order flow is also bullish now, right? And you can see green delta, which means this push up is supported with aggressive buyers and bullish cumulative volume delta. What that tells us is aggressive buyers are pushing the price up. So at that moment, when we see the retracement completes with aggressive buyers pushing the price up, that is where we placed our quick buy entry. And so we placed the buy entry over here, and the stop loss to be below this green candle, and then we target our first take profit in this swing high area over here for a 1 to 1.5. However, for the reasons what I mentioned earlier, it's going to be a quick trade because it's not a A+ setup. We have to quickly in and out. So this is quick scalping. However, the beauty of this approach is, even though it's quick scalping, we are backing our scalp with 30 minutes direction, which means with higher time frame and with order flow and volume profile analysis. So this is institutional level scalping techniques which is used by world top traders. So the price immediately came down, hit our take profit over here. We took our first partial take profits and we let the trade run a little bit. When we see these green bubbles being printed, we let the trade run a little further up over here into 1 to 2.5. What we showed was institutional level price action trading using order flow concepts, volume profile, footprint chart, and also using big trades, which means large banks, large institutions, smart money pushing the price up and confirming the fair value gaps with low volume nodes. So this is very insightful way of looking into the market, analyzing the market, taking confluences from order flow and footprint, delta and cumulative volume delta, and confirming the end of the retracement and entering into a trade, and stop loss and take profits also in line with big trades. So we hope this is a very insightful session for you guys to understand how to live analyze the market and how to take live trades. And please drop us a comment if you found this insightful, which will encourage us to make more videos like this. So what you had a look was world-class level institutional trading concepts. So take care. If you would like to learn the trading strategies we use, click the link given in the description below to access the full free course and use that knowledge to get funded and start trading like a professional. Okay, so it's end of the video and we will see you in another video.